Hey, what's up, everybody? Sam Parker here with MyCreditGuy Credit Restoration. I just want to answer some questions that have come in about MyCreditGuy, about credit repair in general, about credit in general. Just kind of break some things down for you the best I can and try not to ramble too much. The first question that we got is, why is credit repair necessary when I know how to do rapid rescores and what if simulators? That's a great question. Let me tell you that there's a clear-cut difference between the tools that are provided to you by your credit vendor, like What If Simulator, Wayfinder, Rapid Rescores, and then true credit repair. Now, if you have a situation that calls for rapid rescore, that would be where you have clear-cut proof that an item is inaccurate on company letterhead that the client can hand to you. So think of like a letter from a collection company that says, oh, this was a mistake, this should not be here, or a credit card balance update. Those are clear-cut corrections with account numbers on company letterhead. Now, there's a lot of things that fall outside of that realm of possibilities, which is like a collection that the client disagrees with but doesn't have proof on, a charge off, the same situation, a late pay that the client disagrees with, anything where the client says, I don't like this, it shouldn't be here, and either I'm not sure of it or I don't have clear-cut proof on. That would be a credit repair situation. What we're going to have to do then is dispute that item or challenge that item based on the client's consumer rights under the FCRA, Fair Credit Reporting Act, or Fair Debt Collections Practices Act. Now, if you know the two options of a short-term fix with rapid rescores or what if simulators, and also the possibilities available through credit repair, then you can be very dynamic in your solutions for your clients, and you can get more people back to the closing table than you ever have. Don't think of the two being in competition with each other. Think of them as two different tools that you have in your tool belt to be able to get clients back to the closing table. Now, one thing that's very cool about MyCreditGuy is that we will review any and all files, meaning you don't have to differentiate between the two. You send a file over, you say, bottom line is I'm trying to get 22 points. What do you think? MyCreditGuy, 40% of the time, is going to come back to you with suggestions on how to get that file done and not enroll the client, not charge them a dime, and always never charge you a dime. So we'll look at the file, tell you how to get the deal done. And in some cases, in a lot of cases, it's telling you what to do a rapid rescore, to do a what if simulator, to tell the client to do this or that or whatever. And bottom line is, we just want to be your credit partner. So when in doubt, send that file over. But rapid rescore, what if simulator, and then credit repair, if done correctly, are very different things. Great question. The next question that I got was, I often hear clients complain about me pulling credit and having lower credit scores than what they just pulled online. Can you help talk me through this? What should I say to them? That's another great question, and we end up hearing that an awful lot. So here is the answer. When you pull credit online, unless you're pulling from myfico.com and paying the $40 minimum to get your true FICO score, you're probably pulling a Vantage score out there with creditfreewhatever.com. And what you got to understand, and what we can explain to our clients, is that that is a different set of rules, basically looking at the same game. So if it'd be like playing football, and one set of fans gives 4 points for a touchdown, and one set of fans gives 6 points, right? So it's the same action, different result numerically. And that's what's happening with a Vantage score, is that it's judging different things. It's giving an inflated credit score. In my opinion, it's to get your clients to click on the offers on the side, because here's what and here's what you can explain to them, is that if you don't pay for something, right? If you don't pay for a product, you are the product. So when you're getting your free credit score, the problem is that you're the product and people are wanting your information. So what they're doing is they're making offers to you over on the side that say, oh, you have a 720 credit score. That's amazing. Click on this credit card. You click on the credit card and they're pulling a different version of the score anyway. That is what they want to see, probably a FICO version. And then they're saying, oh, actually, you don't qualify for this credit card because that credit score that you thought you were applying with is fake. And now what you should do is get this product that's maybe lesser, in quality, or higher in rate, or, just not as good of terms. So Why is my score less than yours? It's because I pull the end all be all. It's because the bottom line is you're trying to finance hundreds of thousands of dollars, and I'm not the one that decides on the credit score, but these end all be all mortgage banks are going to protect themselves and their assets, being their money. And so they're going to pull a credit score that accurately assesses your credit, where the credit scores online are just a different version, looking at different things and giving you a different score. I hope that helps. The other thing is that we have a video available for you. All of you have a portal, and in your portal, you have a library of videos up top, and we have that in there for you, the explanation of why is the credit score different. So you can just send them over a link. I'll explain it to them. They're done being mad at you, and it makes sense, and they can move forward and be productive. So next question that we get a lot is, client won't let me pull credit or is hesitant to let me pull credit because they are afraid that my inquiry is going to drop their credit scores. Can you help me out with this? Yeah, absolutely. It's a fairly easy explanation. And what I do, and I can be the one to explain it to them as well. And again, there's a video either at MyCreditGuy.com on our YouTube channel or in your personal portal in your library that will explain this to them. But the bottom line is you're trying to borrow hundreds of thousands of dollars, and the bank wants to see your credit. They're going to see your credit. And whatever you pulled online or the reason that you don't want to pull credit, they don't care. I'm your friendly mortgage broker here, just trying to get you the best rate and the best product with the best source. They are going to want to see your credit before they just hand over $400,000 because you say you're a good guy. So they're going to need to pull credit. It has to happen. Now, score-wise, I heard you say that you're afraid it's going to drop your scores a bunch. Let me tell you how this works, okay? There is a window of 30 to 45 days in the mortgage industry, so we go by 30 because that's the more restrictive and a better answer overall. So there's a 30-day window in credit in the mortgage industry where when I pull your credit or when somebody else pulls your credit, it's going to count one time. And that first pull is usually anywhere from 0 to 4 or 5 points absolute max. And that's in exchange for seeing whether or not you qualify for hundreds of thousands of dollars. So it's a good give and take. But the bottom line is I need to pull this. It's not going to hurt your scores that much. If for some reason you've already had your credit pulled in the last couple of weeks and you're worried about that, my pull is just going to go into that window and it's not going to cost you any points. And if it does, again, it would only be just a couple. But the bottom line is we got to pull. And again, I'm happy to tell them that. I can do it through a video or we can do it in person with them if you send that client over and we got to talk them through that. We're more than happy to be that voice of reason, or what I call, the guy from out of town, how people will listen to somebody that they've never met before just because it's an additional voice, an educated voice telling them, yeah, that's right. You do need to pull credit. So that's another one that we hear a lot is client doesn't want to let me pull credit. They're concerned about credit. And you just got to walk them through it. It's one inquiry. It's going to hurt just a couple of points and it might not hurt at all. And it's necessary. Okay. One thing that I want to chat with you about is the psychology of a credit repair client. Credit repair clients are, I don't want to say damaged, but psychologically, no one has stepped up to love on them ever. And so when you're dealing with a credit repair client, it's important to understand and to have some empathy that these people aren't bad folks. And more than likely, if they're coming to you for financing, they have a job, they have income, they probably even have a family they're trying to get a home for. So to just straight up say, no, your credit's not good enough, here's some, random things, and then you send them on their way. A lot of times they're going to have hurt feelings about that. You have to treat them like a borrower that you want to make a pretty sizable check off of someday, which if you play your cards right is going to happen. So I don't like to use words like no, definitely not never. You say things like, listen, you have a few roadblocks in front of you, but if you're willing to stick it out with me, I'm willing to stick it out with you. I have resources available for you. I would like to have a second set of eyes look at your credit and determine whether or not they can speed things up for you. If nothing else, they're going to give you some free advice. And the bottom line is I am not telling you no, and I'm not saying that I can't help you. I'm just saying that we have to get through a few little things in order to get you to the closing table, and I'm committed to that. I'm not going anywhere. If you say that either with your voice or digitally, do a one-time video, send an email even. But you got to understand that most people, and some of you watching this, don't even call these folks back. Don't even email them back. Don't even text them back. You had them fill out a form that said, I choose you over everybody else, and then you didn't call them back. So when they are ready in the future, you've embarrassed them, you've hurt them, they're not going to call you. You've got to have the right word tracks with these people, and you've got to have some empathy. How would I feel if I was going to try to get a home for my family and I was told no? As what I consider at least co-head of my household, I feel this big. That's about how tall I feel. When I go home to my family, I don't feel like I'm a provider, right? And so let's keep that in mind, and let's remember this person is coming to you because they say, I want to buy a house. That person is most likely going to be a homeowner at some point in their life. And the checks are big enough in the mortgage world that it's worth sticking with them, having the right answer, and then giving them the right resource. That in a lot of cases is us. And I'm not just trying to plug us. I'm saying that if you send a client to us, whether or not they need full credit repair help, they get credit education, they get emails, they get videos, they get explanations, they get resources, and they're always tied back to you. But the bottom line is, whether it's us or somebody else, you can't ignore these people. You got to talk to them and treat them like people that are going to eventually create a decent sized check for you, because they are. Okay, let's talk a little bit about what can and can't be helped in credit repair. Okay. First of all, you don't need to be an expert on this. When in doubt, you send that file over and you just mark for free review. And then we don't call the client, we just do a review. But there are certain situations that we can't help on, and I want to go through that with you just so that we have proper expectations. If someone is in the process of tanking their credit, meaning they're late on everything, they opened up credit lines and never made a payment, they are past due on their auto loan and their student loans, those are folks that it would not behoove them to start credit repair right now, because they're going to waste their money. Now, can I get good results on a file like that? By my standards, yeah, I can get deletions, I can get updates, things like that. But if that same client is adding negatives as we go, it's somewhat pointless. We would rather give that client some guidance and some direction, and then tell them when the dust settles, that's when you're going to start working on your credit. But that doesn't mean that we're not giving them credit education, budgeting help, free resources, and again, keeping them in your ecosystem that whole time. It just means I'm not going to let somebody enter our system that they're going to look at it as a waste of money, and that we know that their scores aren't going to end up going up regardless of what we do. So if someone's currently late on like a student loan, okay, they're not a great candidate for credit repair, but that doesn't mean that they won't be in a couple months. Here's what we would tell them at no cost, is that they need to get that student loan under control. They got a couple different options typically, and we can walk them through this. Number one would be to get in a repayment program. Repayment program just means you start making your payments, and typically after 3 to 6 months, depending on the student loan type and company, that loan will basically come out of like a collection action and can even be rolled into like a nice new fresh loan with no late pays on it. Now, if a borrower defaults on that repayment plan, they will have to go into a full rehab program typically, which is upwards of 9 months sometimes of making those on-time payments. But then again, that loan would be brought out of collections, and sometimes just that original loan canceled out and rolled into a nice new loan with no late pays on it. But that would be somebody, like, for instance, that we couldn't help right now, but we could give that guidance to, so that they know what to do, when to do it, and how to get back to the closing table with you. If we run into child support issues and that parent voices to us that it's something that's true, that they're late on and they don't intend to get caught up, that would be a deal breaker for us, where luckily, honestly, we can draw a line in the sand in some situations. And that's one of them, where unless somebody's trying to make good on that, get caught up on that, that's not going to be a good candidate for us, because we don't want to work with people like that. If they have a desire to get it caught up, that's going to be something that we absolutely can help with. Same thing with tax liens, right? Like, we're not a tax attorney. We are not a CPA. We're not going to be able to step in and give them resolution on this, but we can send them to the people that are, or we can give them specific advice on what to do. But with us, it has to be very clear that a client is equally interested in getting themselves back to the closing table, and not that they think that just by, enrolling with MyCreditGuy, that everything just automatically happens, because that's not how it happens. Okay. Next question. I have a client to send to my credit guy. What does it look like? Who do I contact? Okay, so let's break this one down, and it's going to be a bit of an answer. So number one, if you want to send files to my credit guy, we have to get you set up with a secure tracking portal. Okay, that's going to be one nice hub where you can securely submit. You can let us know what's going on with the file. You can track your leads. You can track your clients. We give you a video library in there to answer all the questions. I mean, it's just our communication hub. So all you have to do is send us an email. You can send it to me, sam@mycreditguy.com, or ashley@mycreditguy.com. We will get you set up with a portal, and then you can submit your client through there. You can email them to us still, but that's not best for you. It's not best for us. And security wise, some of you would have some issues with that. So let us know. You can get set up with a secure submission portal. You submit that file. What we will do with it then is look whether or not you had to review or call the client. If it's a review, we get back to you within an hour or so, let you know whether or not we can help, how much we can help, how long it's going to take. And if none of that is of interest to you, what the game plan is for either you or the client to execute on, so that you guys can just do it yourself. Okay. Now, if a client is a good candidate, which happens about 60% of the time, what we're going to do is talk to that client, interview them, figure out what they disagree with and why. Just so you know, most credit repair companies in our industry work on what's called a blanket dispute system, where it doesn't really matter what the client says. The same letters are going out month after month after month after month with no detail, and it's just a skimming process. We are going to talk to your clients and figure out what they disagree with and why, and then typically challenge items based on what we believe to be violations of the Fair Credit Reporting Act and the Fair Debt Collection Practices Act. Okay. What happens from there is about a 30-day investigation where the credit bureaus have by law 30 days to either verify their items, remove them, or update them to a correct status. If they are able to do that, it's not that my credit guy or really any other credit repair company hasn't done a good job. It's that these items have been legally verified. At that point, with us, the clients have a few different options, and we will tell them which one we think is best. But if like, let's say that we're dealing with 8 negative items, and we go through and we get 4 of them deleted, 4 of them remain. Typically, what we are going to do is say, hey, client, listen, do you really disagree with this? And they might say, I really do. And we'll say, do you think that you have proof? Like, could you back it up that it shouldn't be there? If they say yes, we're referring them over to an FCRA, Fair Credit Reporting Act attorney right away. And that attorney will take over at no cost to the client, not only get the correction we're looking for, but in a lot of cases get a settlement from the violating credit bureau or creditor in most cases, which is who's reporting it inaccurately. If the client says, I don't think it's mine, but I don't have proof, we can dispute it again. We can go after it from a different angle, be more aggressive, add more detail, some other compelling argument. Otherwise, though, we are encouraging your clients to take the next step towards home ownership, which is satisfying these validated negative debts. And what we would do at that point is we would get them on with our debt settlement department or debt resolution team. And we're actually going to reach out to those companies that were able to confirm their debt. And we're going to work out settlements, pay for deletions, just any way to save your client money and improve credit at the same time. But we have those mechanisms in place. All this time, they're going to be assigned to one dedicated credit coach who's their main point of contact. They can get a hold of somebody else if they're on the phone, but we want them to speak to this person and form that relationship, because this person is going to tell them what to do every step of the way. And as long as a client doesn't bail out on the options, meaning an item has been verified twice, it doesn't mean that my credit guy has done a bad job. It means that you are legally on the hook for this thing and it's not going anywhere. I have options for you: attorney, debt settlement, right? It's only when a client goes, I don't want either of those and I don't want to pay things, and I decided that all I wanted was things deleted, which is not what we sell or do, that a file might fizzle. But as long as a client sees it through and follows our game plan, we're going to get them back to the closing table. The question is just when, right? And our goal is as quickly as possible. So when do you send the file over to us? When in doubt. How do you send the file to us? Through your portal or through email, but preferably through a portal. How does it work? We look at the file, we talk to the client, we process it, We get the negatives, inaccuracies, outdated things removed, and then we help them resolve anything that remains on the credit report. We look at positive trade lines, make sure that they have enough of them. If they don't, their credit coach will go into great detail about what they need to open and where they need to keep those credit cards at in order to maximize that section of the scoring algorithm. If they don't need new credit cards, but they need just advice on it, of course, we would do that as well. And that way we're addressing all 5 sections of the credit scoring algorithm at once, and then getting them back to you in a way that you can move forward and process the loan. The only thing that we ask of you, broker, throughout the process is support our process. If a client's frustrated or saying that something's not working, restore faith in the process, let us know, and we will get a hold of them that same day and get back on the same page. But it works like it works like it works. And if there's ever a situation where a client months down the line has not benefited from working with MyCreditGuy, I will refund them every penny that they spent on us. So there's zero chance of a client getting into our process, doing what we tell them to do to help get their family qualified for a home loan, and ending up somewhere in the in-between out money. It just wouldn't work like that with us. We just need communication from the client, communication from you, and we'll try to facilitate 98% of that. All right. Next question. All right. What would you say are some ways that I can instruct a client on how to increase credit scores quickly? Great question. And again, I want to reiterate that I'm happy to do this all day long. We don't need to sign up every file, and we want to tell you how to get anything we can back to the closing table. In general, and we've done some marketing on this that we can give to you so that you can share the word on this. In general, though, to get points quickly, we're looking at the credit card section of the credit scoring algorithm, which is credit usage, makes up 30%. And then we're looking at negative items, which is pay history, makes up 35%. That's where we can get some really quick points. And here's how we do it. Number one, I would look at credit cards and look at the balance to limit ratio. Anytime a credit card is over 50%, it is absolutely being a draw on the credit score, sometimes to the point where it's hurting the credit more than it's helping, meaning the credit usage that makes up 30%, a client could be getting an F in that by having their credit card maxed out. So then the fact that they've maybe had it open for a year, that pay history is not enough of an, you might be getting a B or a C in pay history, basically, because the account's fairly young, you haven't racked up a bunch of payments on it, but you're getting an F or a D in the other section. And so cumulative, your grade is not that great, right? And so you would want to look at your balance to limit ratios. And those are things that the client can do today, if they have the funds, where you could see an impact on credit score in as little as a week if you're willing to do a rapid rescore, or at most a month, right? So I would tell a client 50% or below on all credit cards. Then as many as you can below 30%, and then as many as you can afford to get between 5 and 10%. That is the sweet spot where you're showing responsible usage, and you're also showing that you are using the thing and you're not keeping it in your wallet. So it's that nice little middle ground where it's like you're using it, but you're not overusing it. And I know that's silly to be at 5 to 10%. If you got a credit card, you should be able to use it, but credit cards are a really big test. They're a really big risk indicator for the credit scoring algorithm. So this is one of those sections where it's like all eyes on it. Now, same thing, sticking with credit cards as the theme, you can also look at it. And if a client doesn't have enough positive trade lines, we need to get them some credit cards. If they have no credit cards, they're getting an F in the mix of credit section of the credit scoring algorithm. And that's 10% of the score, but it drastically impacts multiple other sections of the credit scoring algorithm, right? Like the credit usage. You can't be judged on credit usage if you don't have a credit card to see how your usage is. So if a client doesn't have credit cards, or if they only have one, maybe having them open up a quick secured credit card, we recommend the credit builder card, and I can get you a link for that if you need it. But we recommend the credit builder card. It's a $200 secured card, reports to all 3 credit bureaus typically within 3 weeks. Now, if a client has super thin credit or no credit, one credit card alone, whether it's the credit builder card or another credit card, typically is not going to get the job done. It's not going to generate the scores for you if you're dealing with a no score situation. So you would want to add multiple, and you could add 2 credit builder cards at the same time, and that will typically generate your score within 3 weeks. If you have credit lines reporting, but they're installment, meaning like a student loan, a mortgage, a car loan, and you're still dealing with a no score or a low score. Again, it's because you're getting held up by proper or the mix of credit, 10%, and then you're not registering anything for 30% under credit usage. So that's why your credit score is being so drastically impacted. In that situation, adding one credit card to that mix is going to satisfy those conditions because you have other credit to draw from for your pay history. So that's a couple suggestions. The other thing is end all be all. If there's something negative on the credit report, it's to get it removed. And that's how you're going to get credit points very quickly. And those are usually going to be your big jumps, because when you get something removed from the credit, it's like it never happened, right? So a good example of that would be like a pay for deletion. Client has a $300 medical bill. They call up ABC Collections, or we call them up for them, and we negotiate that when this payment is made, either the full or a partial payment, that they're going to delete it from the credit report. And that's going to give some big points very quickly. Usually you're looking at, if you rapid rescore it again, 3 to 7 days. And if you let it organically update, 15 at the least and probably 40 at the most for that to hit credit organically. Some people, I just want to peel back another layer of this question. Some people ask to be walked through pay for deletions. Number one, you want to get it in writing. But a lot of times what the collection company will say is that they'll issue it, but it's going to take 30 to 60 days. If they're willing to issue it in writing, then they're probably being truthful. What I would do is record that call and make sure that your client is protected. Again, we can do all of this for you, but I want to share information, because if your client's willing to make that phone call, have them do it, but they need to be protected either in writing or on a recorded call. If the company will not delete it and they're just trying to take payment, hang up. Don't make that payment, because anytime you pay a collection off, it's going to update what's called the date of last activity, and that's going to drop credit scores. Okay. So 3 suggestions on getting points up quickly would be to add a credit card or an authorized user. If it pertains, if it's a spouse, you can have them add on as an authorized user. It could be that they pay credit cards down to their perfect ranges, and that's going to get you points, or getting a negative item deleted in a quick manner through a phone call and a pay for deletion is going to be another way to get some very quick points. All right. Okay, last question I think here is, what are some things that you see clients do that would be easily avoidable? Great question, because you need to put this information out there into your community. Especially as a broker, you fly that community flag. You got to educate them before they make these mistakes, before you don't want to really work with them because they have a 580 credit score, where if they would have been on an education drip from you or seen your Facebook posts about this, then they might not have done those things, and they would be that nice, pretty 660 or 680 that you want to be working with, right? So a couple things that I see all the time that a client doesn't realize, they just straight up don't realize how much of an impact, is that they add one little late pay. They need to understand that there is no such thing as one little late pay, especially during the mortgage process. One late pay could disqualify you for as much as 12 months if it's on a mortgage account. The other thing is that if you have nice high credit, like in the 700s, if you add a late pay, that same late pay that would maybe drop somebody from a 640 to a 605 or 610, that same late pay is going to drop you 60 to 80 points most likely, because credit is very fragile, and the further up it gets, the skinnier it gets, right? And so up here, it's a lot easier to make it wiggle, make it, come down or crash it down. And so that same late pay added to somebody with a nice high credit score is going to be devastating on credit. So there is no such thing as a little late pay. Also, literally, there's no such thing as a little late pay, meaning if you miss the payment on a $20 minimum payment, that could have the same impact as if you miss it on your car loan for $500. A late pay is a late pay is a late pay. It's going to crush credit. So please make sure that your database and that your community knows about that. Closing out credit cards is one thing that we see. If people are out there listening to financial gurus tell people that they should have no credit and that they should cut everything up, it's just bad advice. It's assuming that everybody's irresponsible. And some people are, but that's because they haven't been taught. What we need to let clients know is that when they close out accounts, especially credit cards, they're going to be impacting credit in a couple of different big ways. And it goes a little bit further than this, but I want to talk about the two ways that it really crushes credit. Number one, that length of credit history makes up 15% of the credit scoring algorithm, but it's like the toughest 15% to get, because the only way you get it is by having accounts open for a nice long time. Those are usually going to be credit cards. So you kill that section of the credit scoring algorithm, and there's not really a way to duplicate that. And then the other thing that you do is, remember, 30% of your credit score is made up by credit usage. Let's say that you had one credit card and let's say you have two credit cards, both for $1,000. One of them is maxed out and one of them is down to zero. Right now, you're at a total 50% balance to limit ratio, right? Like two credit cards making up 2,000, one being maxed out at 1,000. So out of 2,000, you're using 1,000, you're at 50%. That's not good, but it's not horrible. You're not getting an F, you're getting like a C, right? In that section. Now, when you go and you follow the advice of Dave and you close that other credit card out because it's paid off, you just eliminated all that cushion. So you went from 50% of your usage to 100%, and that will be devastating for credit. So that's another thing is closing out accounts. Don't do it. Even auto loans, I don't want to see those closed out during the mortgage process, because you're eliminating that length of history. Don't do it. Don't do it. Don't do it. Okay. So make sure that there's a PSA to your clients as soon as they come in your sphere of influence, where you're telling them these things so that they're not making it so that you don't want to work with them, honestly, because they don't have nice, pretty credit. The other thing that I would say is clients still need to know about co-signing. We still have clients all over the place that'll say, well, that's not mine because I co-signed. Or during the loan program, they'll say, well, I didn't pick up any debt, but I did help my son co-sign for a car he didn't need, right? Or did need, whatever, but he didn't need it, and he didn't need their credit to do it. So what they don't realize is that impacted their DTI. It definitely impacted their credit score, because now their overall age of accounts was just that was added into the equation. And the way that works in terms of scoring is they add up all of your accounts, the total length of them, and then divide it by that many. So you just added one more, and then that number is zero now. And so that goes into the average. It's just not good, not good, not good. So people need to not co-sign, and obviously not open up new accounts during the loan process, but they got to understand about co-signing, because people don't get it that it's not just a favor. It's not just helping a family member or friend. You are 100% liable, except for that you don't get the phone call, you don't get the text or the email when it goes late. You just know once you're 30 days past due. So those are some things that I would let clients know about during the loan program, or as soon as they enter your kind of sphere of influence. And those are the most common problems that we see with clients that could be easily preventable. Make your payments on time, get everything on auto pay. Pay your credit cards down by knowing just the balance to limit ratios and how that works. They're going to get that information from you or from us through you, but they're not going to find it anywhere else probably, or they're not going to be taught that. And so you have to know. And then don't co-sign for anybody, especially during the loan process. So those would be my tips, and I am officially out of time. So feel free to get a hold of us with any questions, and we'll come back with more content as you can handle it. Thanks.